Hi, this is Randy Finney with Right Side of the Chart, and today is Monday, February 8th, 2016. In this video, we'll take a look at gold and the mining stocks, GDX. What happened today? Some very interesting price action, obviously, lately, and today as well. A lot I'm seeing in the charts, a lot going on. So I figured today was worthy of another video coverage since there's so much. Now, I'm not going to spend a tremendous amount of time on the charts. I've covered these charts quite a bit recently. Anybody that's even remotely aware of anything going on in the financial markets right now or trading, knows that the big moves lately, at least on the upside, have been in gold and the gold mining stocks. Now, so again, I've talked on this quite a bit recently, so I just want to focus on today's price action, what's happened. We've hit a couple support resistance levels where I expected reaction, starting back here with that multi-year downtrend line. Took that out yesterday, and again, as I mentioned in the most recent video, that until or unless that's reversed, that can only be construed as bullish price action. When I say yesterday, I'm sorry, I'm referring to Friday's candlestick. Now, today was interesting. Most of the updates that I posted throughout the day were in the trading room. And one of the things that I mentioned here is across the board in the mining stocks, we have some potentially, and I cannot emphasize the word potentially enough, potentially bearish reversal candlesticks. Potential because they must be confirmed. I do incorporate candlestick analysis into my trading, and a lot of the patterns, especially these reversal sticks, you need to see confirmation when you get a bearish candlestick or a bullish candlestick, because if you're just trading solely off a one-day candlestick, the probability of the follow through is very low if you don't wait for confirmation either on a bullish or bearish stick. So these are, as I mentioned in the trading room, we're looking at a bearish abandoned baby candlestick pattern, or candlestick I should say, and let's see how it follows through. This is also considered a gravestone doji right here. You have a doji with prices closed down. They open virtually where they closed, just about give or take, within a penny or two, very close. And so that's what we're looking at, and those are both inherently bearish candlesticks. Now, more importantly, what I'm looking at in the trading room towards the end of the day, and actually earlier in the day, I should state, I had pointed out the gap here. I used a different chart from a different charting service, but I had pointed out that we may get a likely backfill in the gap. Now, that didn't happen today. What did happen is GDX went up, peaked out earlier in the day, and came in right into the close. And look at that. We closed right on the lows of the day. So essentially, in fact, that line, if you really, that should put that right there. Right there is the low of the day, and that's right where we close. And hence that doji. You get a doji when the opening and closing prices are the same. And if the doji, if that body of that candlestick, that very small flat body is at the bottom, that's your gravestone doji. And now the potential, and this is why I wanted to do this in the video here, one of my favorite patterns, what I find to be the most reliable. I mean, every textbook will give you different statistics and results, but I am on the lookout for a potential island topping pattern. Let's talk about those real quick. There's two possibilities, again, if this were to play out. An island reversal is simply, imagine what you're seeing here to the left. Let's draw it out. If you had a trend, they come after an extended uptrend. So let's draw it out. Prices moving up, such as they have been in GDX lately, and then you have a gap up. If the following day we get a gap down, now as I mentioned on those candlestick patterns, whether or not you were even looking for the island reversal pattern, in other words, we could have put a doji in right here at this level, let's say, between these two, and then if you had a down day, especially another down day, that would have confirmed the bearish nature. So right now we have, because that price is closed and we have that large gap there, should we gap down tomorrow, then that would confirm the island reversal pattern. If it would gap down and close and that gap stays, that void remains there, that price void, and we gap down and close down, then we will have an island reversal. And as I said, those are a very, in my opinion, very high probability reversal pattern, meaning I'm not looking, if that happens, just to trade and close out the short position I have in the miners right here at the close tomorrow. Especially if we see a second follow-up day, that could lead to a week, 3, 4, 5 days, a week, several weeks, or possibly even more downside in the miners, because these are, like I said, topping patterns, not just pullback patterns. So something to watch, and there's an alternative to it. Let's see if I can find that here. That's an island reversal. Now, let's say the miners hold up tomorrow. There's still, and I can't get to too much in this video, I still have my concerns about the broad market. I have mixed feelings. If the broad markets continue to move down to the lower targets that I've mentioned, and gold continues to catch a flight to safety bid, then we may see the miners hold up. Now, what I would expect at some point, they've been moving in lockstep with gold, and over time they trend together. But usually after these extended runs, you start to see a divergence. So my best guess is if the selling gets ugly in the market, continues to move down, gets uglier, for lack of a better word, then we'll probably see gold continue to catch a nice flight to safety bid, and at some point the miners will start to lag instead of outperforming. They tend to outperform gold on the upside. That's just a guess, and I say that because in these real meltdown scenarios in the past, I've noticed that even when gold's doing okay, the miners get sold because they are equities at the end of the day, whereas gold's an actual commodity. Or precious metal, any way you want to look at it. So here's the island cluster reversal pattern. So this would come into play should prices stay up here and trade on GDX for, it could be 2 days, 3, 4, 5 days, a week. Usually you don't see much more than a week, week and a half. And I can tell you this, with knowing how gold trades, or GDX I should say, I severely doubt we would see a week and a half of sideways consolidation. In fact, let me just point you, for those that weren't in the trading room today or were and didn't catch this, I'll point out a chart that I posted earlier, which also brings me to one other thing I wanted to mention. For those of you that are active in the trading room, keep in mind the default setting for the forum is to show everything, and I do have tips down here in this one, viewing, sorting the activity stream. Basically what I mentioned in there, my preference in the trading room, which I recommend, is to select view or show comments. Now what happens, each post is threaded. So if I make a post here, like I did earlier today, somebody replies under that, and then you have that threaded process, it's called. However, what happens, let's say you posted or you replied to a post that was made earlier in the day, you hit a reply, and that person may not see it, whoever you're replying to. And other people will almost certainly not see it because it gets buried down. In other words, if I scroll down here and replied to this post or this comment, made a comment to this post, that will stay down here. However, if you choose comments and sort the trading room by comments, everything is in chronological order. In other words, if a reply was made to a post that was made over an hour, a couple hours ago, that's going to show up top. So that's my recommendation when you're in there. I'm looking into, I'll see if my programmer can change that setting so everything defaults to comments. And that way, if you prefer to look at everything or updates or anything else, you can do it. Now, let me find that chart I was referring to. Okay, here it is. So I had just mentioned how I wouldn't expect GDX to move sideways for more than a week. Why did I say that? Although it is possible. This is a chart I put up earlier. It's a 4-year history. Each candlestick's 2 days, but you're looking at 4 years of price action. And the point that I was making is the recent run, as strong as it was, and this is undoubtedly one of the strongest moves in years over such a short time period in GDX. However, it is not completely atypical. In fact, it's very typical of how GDX trades. Again, going back 2 years here, and you can take this chart or any chart you want, go back 10 years if you want, in bull and bear markets alike. Again, it applies just as well in bull markets. GDX typically moves up and down in these almost vertical, near vertical rips and dips. So if the trend's up, you're just going to see it stair-stepping up. But you have these tremendous runs, nearly vertical, and then followed by almost a perfect V. I mean, in many cases, there's a almost perfect symmetry, and I don't have these arrows from point to point. I just wanted to draw it so you can see it. So again, this is one rare exception. Here's a period where prices did look like they traded sideways for a couple weeks, although that was on a pretty powerful rip, but nothing major. But again, you can see most of those rip, dip, rip, dip, rip, dip, rip, dip, rip, dip. Okay, and there's a little sideways consolidation action after a dip. Could happen here, but history shows us more often than not, you have these powerful run-ups, and then just as quick as prices came up, they come down. And that's why I don't think we'll see a island cluster top. If that does prove to be the case, you don't go shorting a pattern like that, at least not an all-in, until you have confirmation, which again would be a gap down tomorrow below the bottom of yesterday's candlestick. Below the bottom of today's candlestick, the lowest point, and especially prices remain above that level all day and close down below it. So that's just keep in mind, that's the nature of the beast. That's how GDX trades. Okay, so there's that 1 minute chart, and like I said, it would look something like this, in the 1 minute time frame, a gap down anywhere below those prices, as long as we gap below today's lows and fail to get back above there. The bigger the gap, the better it would be. So to see a gap down to this level, and again, maybe we open up, maybe there's some more selling pressure in the markets, and we tend to, trade sideways for a few days and then gap down. I'd be moving off to the left, to the right of the screen there. So you get the picture. Anyways, just something to potentially look out for. Now again, let's move over to a daily chart. Okay, this is a daily time frame. Now what I want to do today, I wanted to focus on the weekly charts. So there's today's candlestick. And one other thing before we move away from the daily chart. Let me clean this one up. Let's move into a okay, this one's better. I pointed out in the trading room something else, and that is the series of gaps that we've seen. You can look these up online. If you do a Google search for gaps or types of gaps. What we have here, this would be what's known as a breakaway gap. Breakaway gaps come after a downtrend, and it indicate they come early in the move. Then you have in the midpoint of a pattern what they call a continuation gap, so that would be your continuation gap. And then at the very top you have what they refer to as an exhaustion gap. So I pointed out earlier in the trading room that this has the potential to be an exhaustion gap. Now the fact that we put in that gravestone doji helps to confirm that case, but again, we won't. Only in hindsight will we know for sure if that proves to be the case. And like I said, that will have to come in the form of some additional downside in the coming days or possibly. Okay, and we'll just take a look at the weekly charts because, as I mentioned, today is Monday, so the weekly candlestick will look identical right now to the daily candlestick because we only have 1 day of price action. We completed Monday, so by the end of the week, this candlestick will undoubtedly look different, and how that looks will affect these charts, and this is what I'm focused on right now, the weekly charts. This is the downtrend line that formed the falling wedge. So the breakout so far is bullish, and you really can't take anything away from it. Everything I'm talking about here, potential reversals, prices at resistance, extremely overbought, that all takes a back seat to what's currently happened. Looking at a pullback for a pullback trade here on GDX, and it may or may not come right away. It'll eventually come, we know that, but who knows? Maybe there's a little more upside. However, we're very early in the week. Friday we closed last week just above the downtrend line, but also at a very solid resistance. I'd already pointed that out. So the breakout, last week's breakout, I wouldn't have taken on the long side because of the horizontal resistance just above the downtrend line. In other words, I wouldn't have taken the breakout of the downtrend line. Now today, yes, that's bullish to see a prices gap up and stay up above that downtrend line and that resistance level. However, we're looking at a weekly chart, and as I often state, when you're trading the weekly time frames, anything that happens intra-week means little to nothing. In fact, it can mean less than nothing, because what happens, you have a lot of, you're not seeing them here, but I've pointed these out many times on the index charts, the broad markets, are those intra-week whipsaw signals. And so what happens is if this week, this candlestick, by Friday's close, prices move back down and close below the horizontal resistance level, and especially below the trend line, that would be a pretty bearish technical event, because what we'd have here is a false breakout or a bull trap. So again, a lot of work to be done. It's only I'm doing this video Monday night. Let's see how the rest of the week trades. I also pointed out one of my more optimistic scenarios for the miners would be at this point to come back in and maybe in the next week or two, in the next few weeks, back test the downtrend line or the wedge, and then continue higher. Because I've made the bullish case for a long time. These bullish divergences setting up, the recent fake out move we had down here. So that would be a nice area to look to recycle back into the mining stocks long, cover any short positions that you might have on here. And but right now I'm looking really at near term what happens over the next few days to see how these potentially bearish candlesticks follow up. So that was GDX, and again, I'm only focusing on the weekly charts today because, as I said, these weekly candlesticks, no matter which stock we look at, will look the same on the daily chart, and it's really the weekly charts that I see the most on right now. I'm going through these, and I won't go through all the components of GDX as I did the other day, just the top names. And this is Barrick, one of the biggest companies at about $13 billion in market cap. And, that's a solid breakout. Any way you slice it and dice it. Last week we had a solid breakout, I should say. Broke above and clearly closed above the downtrend line. There is, however, a resistance level here. You can see numerous reactions from above and below. And so this, call it $12 level right here, we pierced above it today and failed to close. So that is, I don't want to call it bearish. It's somewhat the fact that we took it out intraday and couldn't hold above the $12 level and close below. That's the resistance level. But I can put almost, I won't say equal odds. I do favor a pullback very soon here in the miners. But I wouldn't be shocked to see Barrick go all the way up here to the 1350 level either, and that's another 1.5 higher. But again, I do favor a downside. I think this is a nice breakout. It was confirmed on volume. It's everything you want to see in a breakout. It just, the hesitation, as I mentioned before, that I had is this breakout came after such an extended move, and my preference on a breakout is to see after an extended move just to make it to the trend line. In other words, from the bottom up to the downtrend line, when we have a pretty strong advance like this. And there was some consolidation there, so I'm going to give Barrick a little more credit than I am really giving it right now. But typically I'd like to see a pullback and a little more consolidation than a breakout. And what happens, in my experience, more often than not, when you have an extended run to make a breakout, what will happen from there is prices will then come back in and make a back test of the breakout point. In other words, this downtrend line, long-term downtrend line. And if it's a successful back test, Barrick will continue higher in the coming months here. So that's what I'm looking for. But I did want to point out as well the candlesticks, and that's the common theme here. As I often say, an ETF is simply the sum of its parts, and what we're looking at now are just a handful of the larger components of the GDX. Newmont, and again, we're on the weekly time frame. This is a 10-year chart. Sometimes I'll zoom in a little bit just to look. So another beautiful breakout, broke out last week, and so far this week we're following through. So as I said, I can't knock it, and I can't dismiss the possibility that we have a little more upside to go before a reversal, because this is a resistance zone. These two lines here, it's where I see the resistance really come in on Newmont, and I wholeheartedly expect a reaction on or around these levels. Now we hit the bottom of that support or resistance zone today, and we pulled back, and look, there's another, like an inverted hammer. That candlestick's just hanging around up there. If we push higher, there the top of that range is around 2713-ish, maybe a little bit higher. I see some reactions there, and it's very thin looking at that. In other words, I'm looking at the volume of price histogram, and once we punch up through that level, I think Newmont's good all the way up to 35 or so. I just don't see it heading straight there. Anything is possible. This has just been one crazy market in the last few years with everything the Fed has done, all the liquidity they've injected into the system. And I warned at one point when we see a pullback in equities, I've been warning for a while, talking about commodities and precious metals, that we'd see an explosion into those stocks. And the explosion hasn't happened in commodities in general, but it did happen in gold and the gold mining stocks so far. In other words, money's coming out of stocks. The Fed has, all the central banks have flooded the system with liquidity. I mean, unprecedented, nothing like, we've never seen anything like it in history. That money's going to find a home somewhere. And with zero interest rate policies now kicking in Japan and elsewhere, I should say negative interest rates at some of the, central banks around the world, that money's going to find a better home than zero or negative rates, and that's where gold is just going to continue. It has a tremendous amount of potential going forward as just a flight to safety or a store of value. And here's that chart. So again, maybe a little more upside at best. If not, we're looking at most likely a back test on Newmont in the coming days or weeks. And keep in mind, I remain open to all possibilities at all times. There's, nice support here. I'm drawing it with the arrow tool. Just pretend that's a solid line. We may come back in, and we may take out those, and we could come in quick. Let's talk about a little bit more instead of the bullish scenario. There's always, the other side of things here, and that would be that these breakouts, even though they close on a weekly basis, they fail. So if we have a really bad week and we close the week back down within these trend lines and below the horizontal support levels, that will be a false buy signal, and that could have longer term bearish implications and could maybe bring the miners back down, for a few more months before a breakout. But with the divergences in place, like I said, I remain longer term bearish, even intermediate term. I'm sorry, longer term bullish. Even intermediate term bullish, just near term bearish. Like I said, maybe a little more upside, but we're going to have a pullback here soon, and it'll probably be like these stocks usually do when they move up quick. It'll probably be pretty sharp and swift, and I just don't think it'll be as deep as these, but we'll see. Okay, there's GG weekly chart, bullish falling wedge breakout. Resistance not too far overhead, and that's why, as I said, I can see a little bit more upside here. The next solid resistance on GG, really well defined, is up around 1575. The stock closed at 1472 today after making a high of 1512, so it's getting close. And again, maybe a little more upside, and that would still keep that island cluster reversal pattern or reversal pattern in play. And if we moved up a little bit higher, and then let's say next week, later this week, sometime next week, gap down below the bottom of today's lows, that would still have the potential for that island reversal top, and maybe take us down in the next coming weeks or even months all the way down to backtest these levels. That would be a great buying opportunity, assuming the charts confirm at the time. If that did happen and we came back down to this level here, that horizontal line's at 1275-ish roughly, and that would come in with a nice backtest of the wedge. So that would be a potential re-entry there for GG. Okay, I'll just hit on one or two more. Here's AEM again, great resistance level, call it 35.25-ish roughly. And you can see numerous reactions, gaps, and you look at that candlestick so far, rejected off that level. Kiss of resistance after an extended run, very powerful run. Bigger picture with the breakout, well intact right now. So the longer term, even intermediate term outlook is bullish. Just near term, we've come a little too far, a little too fast into resistance, especially, considering, there was a little consolidation on EAM before the breakout. But then just a very sharp move really up from this point. And to measure that, just try to quantify that run, that's 36%. And I'm talking just from this little part here before it ripped up. That's why I'm saying a little bit too much too soon. SLW, Silver Wheaton, another potential. There's looks like another gravestone doji right up into resistance. So I'll stop there, and take away from all this is keep it, I'm keeping it relatively light now. I did add to I've been building a short position over the last few days, painfully in dust. Today I actually used another proxy. But that's it. I've added, and my stops, I'll give it a little flexibility this week. And that's an unofficial trade idea. That's not posted on the site. That's just what I'm doing, looking to play a pullback trade, but open to the possibility that it could morph into more, assuming that it does play out. And again, that would be looking at the potential, some of those reversal patterns like the island top or the island cluster top, or even just some downside follow-up to the bearish candlesticks that we put in today, such as, let's say, a red close tomorrow, or maybe a bearish engulfing candlestick tomorrow. There's quite a few things that can happen. So that's all we can do is take it from there. So I'll do an update tomorrow throughout the day in the trading room. If you have any questions, shoot me an email or send me a message in the private messaging on the inbox in the trading room. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.